Okay, so let me start where we have left last time. Um, right, so I'll give you a few questions, but doesn't matter. We'll try to go ahead and we try to discuss compare and contrast debit and the credit cards, right? Debit card and a credit card. Okay, so what is debit cards? Now, debit cards, as you're well aware, issued by banks um, to account holders to facilitate limited banking transaction and payment through bank accounts, right? You can do some purchases, you can make payments through bank accounts, and only debit card you can do some limited banking transaction. Whereas the credit card issued by banks again and some other organization as well, not only the banks, but also some financial companies also issue credit cards, right? And you can say issued by banks and some financial institution, right? There may be a three financial finance companies are also issuing credit cards to credit worth customers with credit limit depending on the income and the credit worthiness of the customers. That's the first differences. Then debit card also used for transaction at ATM and many other benefits. Now, in credit card also you can take some cash advances from using ATMs, right? And so debit card also used for payment for purchasing from participating merchants. And credit cards also can be loan facilities could be obtained against the credit card facility. Now remember that's the important thing. Loan facilities could be obtained against the credit card facility today, right? You can enter into monthly schemes use of credit cards. Then high interest charges and late payment charges are uh, subjected to credit card. Comparatively, today's interest rates are low, but still you may have a higher interest charges. So these are the some of the debit card and credit card differences. But I now give you some slide, but don't worry about these slides. We'll talk about the present positions about the credit cards and the debit cards position in Sri Lanka. But don't try to write all these things in your differences, right? But idea about the debit cards and credit card. I can remember I told you last week how many credit cards, but with incorporating of supplementary cards, now there may be around 1.9 million card holders. That means it's not card holders mean basically one person may have 2-3 cards, right? Okay, let's look at it now about the credit cards. I just give you some food for thought, right? And the credit card issued in 1989 by commercial banks in Sri Lanka. 1989 only the credit card come into the action. Now this credit card operations guideline number 1 of 2010, right? For so there is some credit card guidelines issued by central bank 1 of 2010. Then end of 2020 third quarter, there are around 14 licensed commercial banks and 3 finance companies had been licensed to engage in credit card business, right? Now, that is why I told you issued by banks and finance companies, right, to credit worthy customers. So in number of cards used at end of in 2020, that means September 30th, is something called 1.9 trillion. Sorry, million, right? 1.9 million customers. I told you 981,000, but with including supplement cards, it comes to around 1.9. Now, total volume of the transactions may be around 12.5, but what is the transactions amount as at end 2020? What is the total market for credit card? Is something around 60 billion, right? And this sources by licensed commercial bank, right? Around 60 billion. That is the credit card market in Sri Lanka. But how much is around 60 billion rupees? 60 billion rupees. That's the credit card market. When we look at it, the debit card Now remember also, and that's the important thing is here there may be a defaulted credit cards is around 170,000 numbers, right? And the value of the value is around 16 billion defaulters. That is, the NPL is around 16 billion out of 60 billion. Now you say 60 billion here, defaulted is around defaulted transactions value is around 16 billion. So out of 60, 16 are not settled their credit card. That's not a good sign. When you look at the debit cards, if you want, you can just put it down these 2 points, right? Once you've done it. Now, the debit card issued by banks to account holders to facilitate limited banking transactions and payments through bank's account, where the credit cards like that. Under that also you can put it like that. So the debit card in Sri Lanka started in 1987. Right, in 1997 only the debit card issues started in Sri Lanka, and at the moment there are 18 licensed commercial banks and 3 licensed specialized banks, and 11 finance companies had been issued credit cards have authorized. Now when you compared with credit card, you noted that the debit card users comes to around 23 million. So now Sri Lankan population is 22 million. No, now somebody can ask why it is 23 million. No, there may be a, say, one person may have at least 2-3 credit cards, debit cards, right? That is why the total number of cards in debit cards in Sri Lanka around 23 million, right? What is the, if you really look at the transactional value, is around 50, whereas the credit card transaction value is around 60. So here the total transactions done through the debit cards as at 2020 September 30th is it's around 60, almost same, right? Same 61, there of course 60. Clear? So 10 billion increase when you're compared with last 2013, right? But here is around 160 million as of today, right? Transactions done for the year, right? Total transactions will increase a little bit. Right, now that's something about the credit cards and debit cards. Now I'll give you another question. Banks and financial institutions decide market financial services. Okay, credit card, residential mortgage, and pony. I try to explain very briefly some of these things, right, for your understanding. Now, residential mortgages, I told you, is something called another name for housing loan. Now, what are the features of a housing loan? Long-term loans granted to own residential house on mortgage of such house property. Housing loan given the mortgage of that is property. Now, usually the loan is recovered by monthly installment from the customer, right? And sometimes the interest rate may be fixed or sometimes may be floating. That's depend on the bank, right? So the interest rate may be floating or fixed. Then I ask you to write down the difference between floating interest rate and fixed interest rate. That also I'm trying to give you. Then we discuss about what are the who are the target customers. Are basically customers who are having permanent salary income, taxpayers against EPF balances, right? Some customers. So what are the risks to the customers of a housing loan? Usually, if you go for floating rate, comparatively maybe high interest rate, and there may be a penalties in the case of delaying settlement of monthly, and it may be loss of house if you are not pay your monthly installment, and there may be a little cost for legal documentation. So these are the risks involved by the housing loan. Then what are the risks to the banks? Credit risks. Now credit risks mean, customers taking the housing loan and not settle, or maybe liquidity risk because long-term fund without short-term liabilities. So the long-term funds is housing loan is a long-term fund issued by the short-term fund received from the customer. So there's a liquidity risk can be faced by the bank. Then some legal and human issues. In the event of default, the banks go for selling their property under parate. So there may be some human and legal issues because you may losing the uh, house for you, right? So those are some of the issues, human and legal issues. Then, what are the marketing strategies you can use for housing loan? You know, you can put some advertisement, newspapers, radio, and all. And today we are using exhibition stall, for example, for architect exhibition, contractors exhibition, lifestyle exhibition, building material exhibition. A lot of exhibitions are taking place at BMI. Say we can have a stall there, and you can sell their housing product. Because why? Because your target market are coming for that particular thing. Or you can make use of a direct mailer through architects and housing contractors, and also some personal canvassing for doctors and other professionals. Some banks are doing, and also can engage with property developers, right? Some of the property developers like Prime Land will negotiate with them and arrange the housing loan facilities. Okay, so then uh, so credit card, as we know, is a credit card issued to the credit worthy customers with a credit limit. Okay, so what are the risks to the customers? Now, tendency for excessive credit purchases because of customer may go beyond purchase certain items because this is a credit card. So you want to go back again, or we start from this point, right? Right. Okay. So let me explain it again quickly. Now these mortgages, right? So we are discussing about risk to housing loan to customer. One thing is some banks offering floating rates, so therefore high rates, right? There's a risk there, as well as some penalties in the case of delay in settlement, or maybe sometimes properties losing to customers if you are not properly pay your installment. And also risk to the bank, whereby banks is facing a credit risk because of the customers are default of payment, and banks also have a liquidity risk because of customers are offering housing loan for the short-term borrowing, short-term deposit. And there are some human and legal issues in the event of default of the housing, because the bank going to execute parate and then try to absorb, take that property to the bank. So that's the human and legal issues are coming. Right. And then we discuss about the credit cards. So what is credit cards? Risk to the customers are tendency for excessive credit purchases, and there may be a theft or frauds or misappropriations of credit cards, and then there may be a card failures, there may be a breakdown of system, and then usually comparatively high interest rate, and there may be a penalties and delays payments and things like that. Those are risks to the customers, right? And there may be a banks issues, there may be a technological risk faced by the banks, there may be a fraud, and high credit risk due to non-availability of collateral for credit limit. That's a risk to the bank because the credit cards are offering to customers without having the collateral. So therefore, there may be some issue with the bank faced when you're issuing a credit card based on income level. Then you see the why credit card importance to the bank, increase the retail credit clientele, interest income, fee-based income increase, so you can cater into the wide market segments and things like that. Just to and some of the benefits to the customers, you can enjoy some credit card grace periods around 55 days, and no need of carrying physical cash. You can make use of your cash, make use of your credit card, and there may be some promotional benefits like special discount 10%, 20% for merchants, right, and supermarkets. Then the next one is the pawning. Pawning is a short-term, is a credit facility obtained from a pawnbroker by securing gold as a collateral, right, for a interest rate, fixed interest rate. Now, so in the event of a default, gold will be sold and loan will be recovered easily by the bank. So let's look at it. Usually the target customers of pawning are, majority of our today are individuals and farmers and people who need quick money for a shorter period. Then what is the risk to the customers? So the default in settling the loan before the stipulated period. So you may losing the article, pawn article, because some article may have some sentimental value. And also remember, now these days these rates are maybe 60 to 20. Now those are last year, but it's range from today is going from 8 to 11%, because there's a maximum rate of 10% charged was requested to charge by the bank, by the central banks, right? Then what is risk to the financial institution? As you well aware, if the reductions in gold value, so then people are not going to what redeem their articles, so there's a loss to the financial institution. And also sometimes people obtain some dud articles, even though it's not the true gold article, if you are not really evaluate, so you may take some dud articles, so therefore there's no value, but you may pay maybe 10 to 20,000, 50,000, 65,000. Now these days value per pound may be around 65,000. And also quality of gold. Now certain parts of the country like Putlam, some areas of the country, usually their gold are not good quality gold, right? You need to understand, especially in the areas like Katantikude and the Batiklo areas, the golds are not having high quality gold. So these are the issues faced by the financial institution. Now, but why it is important? Because sometimes owning advances can play a major role in the economy, because especially the farmers and small businesses owners can fulfill their short-term money requirement by mortgaging or by pawning their articles, right? Okay. So what are the benefits to the customer? As I talked to you, is a convenient way of obtaining short-term finance, because only you go there and keep the stuff and get the loans. And then some banks are offering redemption can be made even by part payments today, like that. And they may charge for the daily interest rate 0.1%, like that. And Sri Lankan citizen over 18 years of age who own gold or jewelry can obtain loans. Right. So you have a marketing strategies. You can use TV, radio to market their pawning business, as well as some people are giving gifts like umbrella, mugs, and things like that. Okay. Some banks are offering, if they have a ladies account, they will offer a little less interest rate than what they're offering for normal card. So that means, so they can offer bundle with other financial products. Like if you have a lady account, ladies can get the pawning slightly lesser interest rate than 0.5% less than the normal rates. So these are some of the marketing strategies used by the bank to sell the pawning products. Okay, then we are now moving to sorry, right. Okay, so we will start with where we have stopped last time. Okay, education loan, right? Okay. Okay, educational loan, no? Educational loan. Right. So education loans also provide short-term loan facility mainly for education related purposes, right? Education loan, and usually the bank may take care about maybe sometimes course fees, or if you go for broad study, so they will take care about the air ticket, etc., etc. Right now, the education loans are usually offering grant under personal guarantee or property mortgages, right? So usually you can give a housing loan based on personal guarantee or property mortgages. Now, education loan also can be open, usually, especially for education loan, can be opened individually or jointly with his parents, right? So why we get the parents into the scene? Because parents basically pay behalf of their children. And also usually for education loan, banks are charging comparatively less interest rate, as well as remember, as well as with grace period. Now, what do you mean by a grace period? Grace period mean basically, so there you are giving some times to settle their loans. So maybe 1 year, 2 years, depend on the type bank, right? Depend on the bank. So you need to pay during the grace period. Sometimes you need to pay only interest, or maybe you don't want to pay at all, but the interest be charged into the next installment, right? So there may be a differences. Actually the grace period mean is moratorium, right? Some, because students need give some times to carry out their job, and then through the earning of the job they need to settle their loans, so they need some grace period to pay their loans, right? So education loans are like that. So then we move into the SME loan, the microfinance loan. So microfinance loans are given to small time entrepreneurs who has a lucrative business idea and not being able to fund on its own or offer tangible security. Sometimes we offering a SME or microfinance loan, and certain banks are very much good in this microfinance loan, because these people may have not have any tangible property to keep as a security, but they have a good business idea, right? So this type of loans, so the semi loan or the microfinance loans, encouraged by the government through the central bank to offer comparatively less interest rate to promote their businesses, right? That is why, because otherwise what happened, these microfinance customers may go to the informal lenders like Poli Mudalali and all. They usually charge higher interest rate, right? So they never develop, because the moment whatever they earn, once they give as a higher interest rate to these informal lenders, they cannot develop. So that is why it is a duty of Sri Lankan bank to provide microfinance and SME loans for people to develop their businesses and also to develop themselves, right? So microfinance loans therefore play an important role uh, in the economy, right? Okay, so we discussed this loan also, term loan, and then we may give some commercial lending also. So the financing for commercial sector is to improve an existing new businesses. So some banks are telling business loan. They branded the loan as business loan, right? Okay, they will give loan to start the business. So to improve or existing loans, existing business, right? So commercial lending is given for business purposes. Then you may come up with uh, trust receipt. So another important things about the trust receipt, it is an arrangement involving in trust receipt. The bank remains the owner of the merchandise, but the buyer is allowed to hold the merchandise in the trust of the bank for manufacturing or sales purposes. It's worked like this. Now say, so you can get a trust loan, and the items what you having is under the ownership of the bank, but you can as a customer, you can make use of. You sell it and you manufacture items from your raw material and sell these items to the customer, collect the money, and you can settle with the bank. But goods are, of course, ownership is belong to the bank, but the goods with the under the custody of customer. So that is basically why banks are giving them to keep the goods under his custody, because of the trust, right? That type of loan based on the trust we mentioned as trust receipts, right? Now you know what you mean by a trust receipts. The proceedings of the sales can be settled the loan of the banks. That is called trust receipt. Is the type of loan. Then you may come across with another one, so don't worry about this. You don't want to have a pledge loan, right? Now, what is the difference between pledge and the trust receipt? The difference is, now these stocks not keep under customers custody, right? Now these goods are put under a separate place under dual control. Now, especially for pledge loans, for the rice mill owners, right? What they buy paddy from the people, farmers, right? For that they need money, right? The bank will give the money for those rice mill owners. And what happened? There may be a common place. There are common stores. Those goods, or I mean the rice what you have collected from the farmers, keep it in a separate place. So there are two keys. That is what you call dual control. One key with the bank and one key with the customer. If the customer wants some rice to be converted to the paddy to be converted to rice, some of the portion they will take it from the stores, and they, for that, the banks need to go and the customer needs to come, and then they will open and they release some goods. So goods, for the amount they release, they have to pay the money to bank. So pledge is that. Now, what is the main difference between pledge and trust? The stock should be kept in the stores of the bank, but usually separate place. Somebody has to hire. I mean, the customer need to hire the stores, right? And it has to be insured by the customer. Otherwise, there may be something happen. So banks need to take the cost. So therefore, the pledge loan, most important things under the pledge loan, the stock should be kept under dual control, and the control and with the and have not individual access to the stocks. Both has to go when they want to clear the stuff. So in Sri Lanka, it's very much popular, especially for paddy cultivation time. The rice mill owners, but they take a loan from the bank and give that money to farmers and collect the goods and guarantee. Or I mean, the collateral is the pledge. The pledge, what is pledge, is the paddy, right? And so there may be a collateral between these two, and so the price or the paddy is not belong to, not keep under the custody of the customer. It is with the common place where you need to have a dual control to access the goods, right? Should be specially described in the pledge document. There's a pledge document like trust documents. So between bank and the customer, you need to have an insurance cover for that, obtaining cover. Otherwise, something happened, you're losing to customers, right? To the bank. So bank should ensure that insurance policies are renewed annually till the loan is settled. So it is a duty of bank to inform the customer, make sure that insurance cover should be renewed if go more than 1 year period, right? And so there may be a depreciations in value, ensure that additional security is available, right? So if the value of the goods, I mean the paddy, is not enough, I mean you need to get a separate security from the customers. So these are what you call the pledge loan. Now you know the difference between pledge loan and a trust receipt. Trust receipt, the goods under the custody of customer. But here the goods are kept separate place under dual control, right? If the customer wants some paddy, some items from the loan you have taken, items you have stored, so you have to inform the bank. There's a two keys, that's the dual control. Both has to go collect some items, and for that they need to pay to the banks, right? That's the pledge loan. Is very important things, and you know the pledge document should be registered within 21 days of the land registry of Sri Lanka. Then only it's become legal document, right? 21 days. Okay. But don't worry, much of this you won't ask. Then we have the bridge financing. Bridge financing mean it is again a loan method. Financing used to maintain liquidity while waiting for an unanticipated, reasonably expected inflow of cash. If there is some cash delay in by the customer to fulfill certain requirement, so bank will give loan as bridging finance to fulfill that requirement, right? So therefore it is not much popular in Sri Lanka, but bridge financing is commonly used when the cash flow from a sale of an asset is expected to after the cash outlay for the purchase of an asset. That means basically it's like this. Now say you sell some items, but you need some money to be recovered, but money won't come. So there is a gap between money received and and money sales. So there is a gap between these two. So bank can provide a loan provided that the receivable is with them, right? So that is how what you call bridge financing, right? Remember, there is a loan scheme called bridge financing. Then so don't worry about much of this. So then you may have another type of loan we call revolving credit, right? Revolving credit. Now revolving credit is a type of credit that does not have a fixed number of payments in contrast to installment credit. Like can you give me an example for revolving credit? If one example is our credit card. Credit card also some sort of a revolving credit, as well as certain LCs, right? Also can be considered as a revolving credit, because customers can pay as and when you require the money. And corporate revolving credit facilities are typically used to provide liquidity for companies to day-to-day operations, right? Certain revolving credit can be taken by the corporate customers, can be used for their day-to-day operations, right? Okay, so that is what you call sort of a revolving card. What are the features of a revolving card if you look at it? So borrower may use for withdraw funds up and prepaid approved limit from the bank, and then amount of available credit decreases and increases as funds are borrowed and then repaid. It's like a credit card. Instead of credit card, they are giving money. That's the important things, right? Okay, so again, sometimes we call them as, even for overdraft also can be considered as sometimes a revolving credit. Permanent overdraft can be considered as revolving credit product instrument. Okay, these are the type of credit products available by the banks to customers. Then sometimes you will come across that sorry, so don't worry much about so don't worry about these things. Okay, there are sometimes loan facility you are giving for corporate customer where who need large sum of money, right? Now sometimes the big organizations or corporate customers, or maybe a big projects like big money, right? Say Maga Institute, right? And they are going for construction housing complex, or maybe a road development or something. So there's a corporate customers. So they need big money. So one individual banks may not in a position to give entire amount for that particular customer, or maybe the banks don't want to take high risk by offering the high number of high value of loan to one customer. That may be due to some limitations imposed by the central bank. You won't give big loan to one single customer. So in that situation, what happened, there are few banks are get together and give a loan to a customer. Now, say for an example, one corporate customer want 100 million loan. So bank don't want to give 100 million. So they will arrange few banks like Bank A, B, C, Sampath, Commercial, NSB, Bank of Ceylon, People's Bank, and all banks to get together and offer form a one loan. And that loan is, we call them as syndicated loans. So syndicated bank loan mean, so this is the loan offered by a group of banks, several banks together to a single borrower. We call syndicated bank loan. If the examiner asks you what do you mean by a syndicated bank loan, that means group of banks, so number of banks, several banks get together and giving a one single loans to a one single customer is called syndicated bank loan, right? So why syndicated banks loans are given, maybe due to various factors. One factor is one bank is not having such a big amount to give the loan, and another one to diversify their risk, because there are so many banks are involved in it. So there we diversify the risk. So those are the reason why banks are offering syndicated bank loan. Okay, so then microfinance loans we discussed, and then we are moving to import loans, another type of loans specially given for importers. Now, granted to facilitate financing of importers' goods and services. Now, say for an example, if importer imports certain items from abroad, so they want to have money for clearing purposes as well as for some other purposes. So the banks can give loans. We call them as import loans, right? And that security can be anything, right? Maybe a property or whatever, right? You are not giving the goods as under their custody, so then it's a separate type of loan, right? So this is a loan given for bank to bank by the bank to customers, especially for importers, for financing of important goods and services, to open LCs and things like that sometimes. Usually these import loans are short term. Remember that import loans are short term, maximum of 180 days, right? Maybe 180 days, that means divided by 6 months. So import loans are short term for that particular purposes. Now, granted for settlement of underlying import transaction such as retirements of letter of credit bill or DA bill, etc. That means, so you can keep as a guarantor as their letter of credit, so bill of the document acceptance bill can use as a guarantee, right? Then settle out of sales of the goods or services important. Sometimes you can settle the loans, so proceeding from the imported items, right? So like that, but you are not keep under custody, right? And granted with a specified limit of the client based on your relationship with the client. So import loans also, now these days there are not much import loans. Why? Because there may be a restrictions of import loans. So therefore banks are giving different loans for different customers. Those import loans are given for export loans. So the pre-shipment loans are given for exporters. Like that, there are different type of loans offered by customers, by the banks to different type of customers, right? Then you look at some of the leasing facilities. Now, what do you mean by the leasing facilities? Is the purchase of an asset, mostly building, machinery and vehicle, by leasing a finance company which retains the ownership of the asset, the lessor. The lessor means the finance company, and then allows the client, the lessee, to use the asset for certain period of time in exchange for a period of free. So once you pay the installment, and that asset, the ownership is transferred to the lessee, right? Till such time, the lessor have the ownership, but you can make use of the vehicle. Now, say for example, if you go for leasing facility for vehicle, so you have the right to use. You have using the vehicles, but once you completed the payment of the agreed amount in installments, then the ownership is transferred to the lessee. So the leasing also important thing. If we don't have the money to purchase, and people may go for leasing. So there are two types of leasing we identify. One is we call the financial lease, and the other one is we call the uh, operating lease. Now, usually in Sri Lanka, we people are going for financial leasing than operating lease. Now, operating lease means it's a short term, and the lessee retains all right of the ownership at all the rights, right? But in financial lease, it's a long term, and ownership of the asset transferred to the lessee at the end of the lease period, right? But the lessee will keep the operating lease, right? But Sri Lanka, high value equipment, machinery, and we go for operating lease. For vehicle and other short term things, we go for financial lease. Okay, I'm just going through, I think, some of these things. Okay, you are learning under commercial banking, as well as the survey, as well as the survey, right? And then we know the financial leases, right? And then if you really look at it, this paper uh, is comes under so this your exam, right? Now, this question paper I have quoted from just completed last Sunday. You had the exam, that is 2020 March and September combined exam took place in January 2021, and that is on last Sunday. So one question is definitely they ask me write short notes on credit cards, pawning, leasing, margin trading facilities, right? 5 marks and each total of 20 marks. Right now, what you need to write. Now, say for an example, I'll take an example. First, you need to define, say, pawning. Now, what are the things you can write under pawning? Pawning mean, now go back again, what you need to write. Now, if a questions come like that, let's I will explain what you need to write. And remember, it's a 5 marks, so you don't want to write in lengthy answer. But let's look at it. What you need to write under pawning. We will just look at it. Will you? How what to write? Then you get an idea about. Right. Okay. You can say pawning is a short-term, 1 year credit facility obtained from pawnbroker or from a pawnbroker or bank by securing gold as a security for a fixed interest rate, right? And that's you need to tell. That's the type how you prescribe what is pawning. Then you can write what are the benefits smallly, who are the targets. Say whether this pawning are basically usually taken by the individuals and farmers, and who need retail credit facility a shorter period of time, right? And that's the second point. Then you can write this usually these pawning loans are have risk to the customers as well as banks. So if you put 1 point is enough, right? And what is the risk to the financial institution? Reductions of gold price, obtaining that articles, quality of the gold may have some issues with the financial institution, right? And what are the issues for the customers? Maybe they may lose if you are not pay their dues regular agreed period, so you may lose your gold items, right? Okay, so these are the things you need to write under small note, 5 marks. Okay, I think now it's very easily you can earn marks on products, answering the questions like that. I just give an example. Right. And this is the question, right? You see, credit card. Credit cards also you can say it is a plastic card offering to a credit worthy customers, and there's a limit. They can purchase uh, uh, goods from the merchant, as well as they can obtain advances against credit cards. Also, you can take some loans against the credit cards, right? And then you have to explain there are some benefits and risks to both customers and systems, right? The leasing also, you can just put whatever I mentioned a little while ago, and thereby you can obtain that there are two types of leasing. And what is margin trading facilities? We discussed the loan given by the intermediaries or stockbrokers for stocks customers to purchase some stocks and keeping the stock as a security. So that is margin trading facilities. Okay, so remember that, right? So it's easy to, you can say even for, if you put 3 marks for one question, so you easily obtain 12 to 13 marks. It's a general way, but usually you will get almost 18, 17 marks of this type of question, right? Only thing you need to write, what are the important things you need to write. Now, you remember the concept what we have developed. What is credit card? What is the benefits? What are the risks? What are the customer risks? And what are the risks to the bank? And that's all, right? If you remember that, you can easily write down. Otherwise, you can keep it some small note about the credit cards and keep it for references, right? You see, one question comes in every year like this. Now, one time it came import loans. Then you need to write under the import loans these points, right? Only the import loans. If you put these 5 points, it's more than enough, right? Sometimes the examiner asks you leasing facilities. If you put this point, more than enough, you get the full market. If you want to put some more risk also, it's good, right? Okay, so right, and also if you want to write about the pony, simple, right? These are the type of question the examiner asks you about the credit products, right? Okay, now we move into the last sections about the type of customers we call payment customers. Now, before that, as I promised you, I don't know whether you have written, if I'll give you a question now, right? What is the difference between floating interest rate and fixed interest rate? Now, there may be a questions come this time, right? Okay, write down, right? What is the difference between floating interest rate and fixed interest rate? So one column you divided, you take a paper and divide it into two. One side you put floating interest rate, other side you put fixed interest rate. Okay, now I will explain to you some of the points. Now, what is the fixed interest rate mean? Fixed interest mean now the loan interest rate remain fixed for an entire loan tenor. So that is the fixed interest rate. The loan interest rate remains fixed for a entire loan tenor or part of the loan tenor, right? Sometimes, the present way only 3 years you go for fixed and the balance you go for floating, like that. So therefore, the first definition you need to write down, the fixed interest rate, the loan interest rate remains fixed for the entire loan tenor or part of the loan tenor for a fixed period, irrespective of the market conditions, whether the market conditions or market interest rate, even those going up or going down, you are supposed to pay fixed amount as EMI. That is, EMI mean uh, monthly installment, right? Equal monthly installment amount you need to pay to the bank. So that is a what is a fixed interest rate loan, or what is fixed interest rate. Okay, right. What is that? Loan interest rate remain fixed for an entire loan for a fixed period, irrespective of the market condition, whether the market rates are going up, down. So you have pay and during the tenor with agreed fixed period at the time of taking the loan. Then if you put it the opposite side of the fixed interest rate, that is a floating rate. What do you mean by the floating rate? The loan interest rate moves up or down, as per market conditions during the entire loan period or entire loan tenor. The loan interest moves up or down as per the market conditions during the entire loan period or entire loan tenor. Right? So that is uh, floating rate. Second difference. Now, usually EMI, that is equal monthly installment, and loan repayments period will remain fixed for contracted entire loan tenor, right? So EMI, that means equal monthly installment, and the loan repayment period, right, will remain fixed for the entire loan tenor. But whereas the floating interest rate, bank may change either EMI or loan repayment period to adjust with the increase or decrease in the market link interest rate, right? That means, so bank may change EMI or loan repayment period. But whereas the fixed interest rate, you want change the loan repayment period or the EMI, the loan monthly installment, we are not change. But as far as the floating interest rate, depend on the link market interest rate, the either they change the EMI or loan period, right? Second point. Third point, you can say, if you put it like this. Now, say if you want to resettle your loan, so then what banks do under the fixed rate, they will charge some penal interest rate because of your taking interest, because of your settling your loan as before you agreed period. So the bank may impose penalty for redemption, so pre-early settlement. But as far as the if you go for floating rates, right? Because there you want charge penal rate. Why? Because it's depend on the market rate, right? So usually there's no penal interest rate charge for early settlement of loan under floating rate. Another advantage, right? Another benefits or another differences. And if you say another difference between difference between fixed interest rate and floating rate, usually fixed interest rate are usually less expensive, so be more expensive fixed rates. Why? Because they maybe have a around 1 to 2% more than the floating rate. Bank take the risk, no, whether it goes up, but you're still paying the same amount. So bank take the risk. Therefore, fixed interest rates are sometimes expensive compared with floating rate, right? Floating rate sometimes, because this depend on the market rate. So therefore, not less expensive than when you're compared with fixed interest rate, but it depends on the market rate fluctuation, right? So these are some of the differences between. Still, there is no question asked. But examiner can ask from you, what is the difference between the floating rate and a fixed rate? I think now you understood what is the difference between floating interest rate and a fixed interest rate. Let me repeat again. The fixed interest rate will remain, the loan interest rate remain fixed for a entire loan tenor for a fixed period, irrespective of the market conditions of the interest rate. But as per the loan floating interest rate, the loan interest rate moves up so down as per the market conditions of the during the loan, entire loan during the entire tenor. Right. Second advantage is EMI and loan repayment not change during your tenor. But whereas the floating rate, it may change, either EMI or period may be changed. Third one is as to when you for early resettlement, there may be a penalty charged by the bank if you go for fixed rates. But whereas usually if you go for floating rate, there won't be any penalty. Because why? Because you pay as prevailing rates during that time, right? And usually high cost, high interest rate, expensive fixed go, but payment is less. Okay. Right. Any questions? Any? Have you understood the difference between floating rate and the fixed rates? Haridhar. Okay. Clear? Hopefully, right? Right. Otherwise, read the recorded version and try to put down. Right. Now we are come to a end of the final area about financial client management. Type of clients: payment service customers. Payment service customers. I'll send you a lot of Word documents giving more information, even though my handout is little less, but then the Word document, please read along with that, but I'll give you more information on this as well. Okay, let me explain. Who are payment service providers? Right? Payment service providers, is facilitate effective and efficient payment and settlement process locally and internationally. So the payment service providers provide effective and efficient payment and settlement process locally and internationally. Now, most of them are online real-time basis to expedite financial transactions. Right? Now, who obtain these type of services from financial services providers? We call them as financial services customers. Right? People who provide that services is called payment service providers. The customers who obtain the services from them is called payment services customers. Now, if I really just go through some of just for sure understanding purposes only, right? Now, if you really look at the evolutions of payment instruments and payment technology, now earlier we have a barter system, right? Like that. Then we move it from barter system to cash. We introduce a cash. We buy goods paying cash. And then after some time, the cash is moving to checks and money orders and things like that, right? You can pay through cash or through money orders. Then it moving to from money orders to cash to is going to the payment cards. So we do with transactions through using cards, credit cards, so payment cards, debit cards, or whatever. Then the payment methods developed to do transaction via internet crediting and debiting your account. And then it's moving to the mobile phones today. And today it is going for even for phones transactions. So wearables, Internet of Things, right? So you can do transactions now through certain wearables. Even for your mobile phone, mobile watch, you can do some transactions, right? So this is how I've just briefly explained to you how evolutions of payment and instrument took place in the world, right? Now, don't worry about this, right? Now, what do you mean by a payment system? Is a set of payment instrument, procedures, rules, and transfer funds transferring between participants. We call payment systems. But don't worry about this. And what do you mean by the payment instrument? Of course, the one payment instrument is cash. Second, non-cash payment instruments are available, as we explained to you. Checks, postal instruments, payment cards like credit cards, debit cards, stored value cards through mobile payment based payments, right? And these internet based payment systems. And today we are discussing about QR code based payment. There are different methods of payment instruments available, and customers who are using these instruments we call payment service customers, right? Okay, now that is why the payment service customers obtain these services from such service provider for their financial transactions, right? So such as credit cards, debit cards, fund transfers, slips, RTGS, SEFs, online banking, we are customers are using today, right? Let me now uh, just give a brief understanding. It is available in your handout, right? Now, for that, we have a legal framework. That means you need to understand, and people who are students who are doing law must learn all these things. We have an act in Sri Lanka, what is called Payment and Settlement System Act 828 of 2005. So this provides regulation, supervisions, and monitoring of payments and clearing settlement systems and money transfers system through and the electronic presentment of checks in Sri Lanka. So we have a law covering, act covering all these payment methods, that is called PSSA Act number 28 of 2005. Need to understand, right? So then we have another act in Sri Lanka covering services providers, payment card and mobile payment systems regulation number 1 of 2003. This was issues under payment and settlement systems once the cards and the mobile payment systems develop. So these are the two type. This is the legal framework. Basically, you need to understand when you are dealing with payment services, right? What is the main act governing that? Payment and Settlement System Act number 28 2005. I keep on telling you this. We are going to learn under commercial banking, even for law, as well as your survey, right? All three subjects will talk about Payment and Settlement System Act 28 of 2005 and supported with payment electronic. Now we have Electronic Transactions Act, things like that, where you accepted the electronic signatures and things like that. That we are going to touch a little bit under law relating to our subject. Next topics we are going to discuss. Once you complete this, we are moving to the legal aspect of customers. So we are going to discuss that. Okay, so that's the legal framework, right? Don't worry. So then, to facilitate this business, central bank is empowered. There is a separate division, a separate department in the central bank, which looking after empowering the payment and settlement systems in Sri Lanka. Is called, what is that called? Payment and Settlement Department, or PSD of Central Bank of Sri Lanka. Like Bank Supervision Department, we look after issuing licenses, right, and things like that. So there's a separate department in Central Bank of Sri Lanka which look after the payment settlement issues and system. That department is called the Payment and Settlement Department. Actually, this department was established in Central Bank in 2002, not so long, right? 2002 only. The Payment and Settlement Department established in Central Bank, where all these functions will do with respect to the payment and settlements right? So there's a separate department in the CBSL which formed in 2002, right? Now you see the payment in Sri Lanka can be classified into a large value transactions or retail value transaction, considering of the volume and the type of party that initiate the transaction. So you can convert, send the money through in electronic form in the large value as well as small values. So therefore, large value payments are generally high value payments made by financial institutions, whereas the retail payments are executed by individuals are relatively low value system. So the payments can be made by a large value, right? And also retail payments small value, right? Now Sri Lanka, we have what you call RTGS systems, that is real-time gross settlement system, is the large value inter-participant fund transfer systems in Sri Lanka. If we want to send more than 5 million worth of money for another party, right, you may have to use the RTGS system in Sri Lanka. That is, we call real-time gross settlement systems. I think already you have may learn all these things. Now, if you really look at the electronic payment systems in Sri Lanka, I just little while ago explained to you. One is we have a large value payment system and the retail payment system. Now, the Sri Lankan electronic payment system can be divided into two: large value payment system and retail payment system. So, the large value payment system done through real-time gross settlement RTGS system, where what are the retail payment systems available for customers? One is, you can say one method is check clearing or issuing checks and check imaging and truncation system, then card-based payment system, then Sri Lanka interbank payment system, that is slips, and then we have a tele or mobile banking payment system. So you have an internet banking system, you have a e-money scheme, and also you have a common electronic fund transfer switch, that is SEF. Those are collectively called them as retail payment systems, right? Now we have a two type of payment systems in Sri Lanka. One is large value, is more than usually 5 million, and retail payment system is usually less than that. Right? So what are the retail payment systems and what are the large payment systems? I think you have now little bit of idea about the payment systems in Sri Lanka, right? Okay, what is the act governing that we discussed? Section 25, that is what we discussed, 28 of 2005, and which is covered under separate department we call payments and settlement department, right? So so okay, now we move into what is RTGS. What is RTGS? I'll just give you an example here. RTGS, right? Now, and also I have given you a note that also having lot of details about the RTGS. Now, the RTGS, now you have to correct the version TRGS. The RTGS system is an electronic and computer-based fund transfers and settlement system and introduced by the central bank in 2003. Right? Now, what is the RTGS talk about? It processes and effect a financial settlement with high large value and urgent payment instruction individually and immediately on real-time basis. What do you mean by a real-time basis? Mean if you send it now, immediately you get credited to that particular organization. That is what you call the real-time gross settlement. Now, this was charged by earlier is 1,000 rupees. But now I will come to questions, right? Then So the again real-time gross settlement systems. Again, I have given you a note on separately as how it works, and there are around uh, 37 participants. That means people who are involving in this RTGS transactions. Now, if you really look at it, how much of money you are transferred through these real-time gross settlements in Sri Lanka, right? And it is around, if you really look at it in figures wise, total transactions is around, in value wise, is around how much you think? It's around 42 billion rupees with transaction, right? Total transactions usually taking place in this through the RTGS system, and average per day is around 665 billion transactions are taking place. That is huge amount of transactions is taking place. I just give you this figure for you to just to understand what the volume of transactions taking place between financial institutions and between primary dealers, between large customers. You can transfer the money as a big amount, right? And also remember, now I'll give you a question. Now this is 2021 June exam. Like, no, if a question comes like that, what is systematically important payment systems? I'll put 3 questions here. 2021 June exam or May June exam, your exam. Suppose the examiner will ask you questions like this. What is systematically important payment systems? SIPs. Second question, what is known as the Lanka settle system in Sri Lanka? Third question is asked, what is the maximum fee could be charged from customers by participating institution mean banks, right? Per RTGS transaction as per the payment and settlement system circular number 18 of 2020. Right? Okay, can anybody tell me the answer for question number 3?
500.
Huh?
500.
500. Any, but I have put 1000, no? But I have put in your note 1000, no? Right. So this was changed right now, not 500. What is the amount? What is the maximum? Now, according to the latest payment and settlement system circular number 18 of 2020, and from a participating institution, that means a bank can charge from a customer per RTG transaction. Per transaction, what is the maximum amount, right? That maximum amount can be charged by you is what? This is the circular, right? This is the circular payment and settlement system. Don't worry about these circulars. 18 of 22 issued in last 17 September 2020. And what is the maximum charge they can say? How much you think? And it is basically, if you really look at it, it is something called the operator charge levy from 2020 per transaction fee that can be charged from customers for fund transfers effected through RTGS system was reduced from to 400 rupees from 1000 per transaction. Now you have to delete that charges now 400, not 1000. Right? Now you have to change. Now you see, now this is the last year when I teach you all these things. The transaction cost is 1000 rupees. Now you can charge from the customer for RTGS is 400 rupees. So these are the things you need to know, right? If you really look at past papers, that figure may be different. Now, according to the new circular, what is the maximum? So therefore, you have to change what is the amount you can charge from a customer 400, right? Maximum you can reduce to 400 customers. Banks can charge 500, but usually according to circular you need to charge for 400. Why? Because earlier the operator charge, I mean the people who support this RTH transaction, they charge 450 from the bank. Now it has also reduced to 200. Accordingly, charge from the customer also change. But we don't worry about operator charge. That maybe comes under a survey. But as far as we are discussing about the customer's point of view, no. So from the customer for RTGS transaction, maximum was can be charged for 400 rupees. It was reduced from 1000 rupees per transaction. If the examiner asks from you, what is the charge? How much it is? 400 rupees. Okay? Clear? Right. So now, going back to the questions I'll ask from you, I'll answer the third question, right? Okay. So moving to the first one. What is systematically important payment systems? Right? I think this question asked by survey. Yeah, one I can't remember the year. They asked what is systematically important payment systems, right? So what do you mean by a systematically important systems? Now, like I don't know whether I told you, in banks in Sri Lanka we have called systematically important domestic bank in Sri Lanka. Can you can you name what are the systematically domestically important bank in Sri Lanka? Now we have around 35 odd banks now. Can anybody tell me what are the systematically important banks in Sri Lanka? Domestically systematically important banks in Sri Lanka. Can anybody tells me?
Ceylon Bank.
No, I am referring to the latest definition, right? Now, okay, I will tell you that also for your benefit, right? In banks in Sri Lanka, right, based on the capital adequacy ratio, divided into two types. One is domestically important banks and domestically not important banks. That doesn't mean they are not important, right? There are two types of banks. One, significantly important domestic bank, systematically important bank, as well as systematically non-important bank. Because of that, so they need to pay little higher capital adequacy ratio because of their systematically important bank, so they have to pay little higher absorption high absorption ratio building to the capital adequacy ratio. I think you also going to learn all these things under commercial law somewhere, right? So therefore, you need to, based on that, Sri Lankan banks, those systematically domestically important bank can be divided into three layers. One, layer 2, layer 3. We don't have the layer 3 banks, right? So there are 4 banks in Sri Lanka identify as systematically domestically significant banks. The banks comes under tier 1, or in the level 1 or tier 1. Can anybody tell me what are the 2 banks comes under tier 1? All are significantly important banks. Those 2 banks are, we call them as, can anybody tell? Okay, I'll tell you the tier 2 banks. One is HNB and what is the other bank? People's Bank. People's Bank, HNB. Then there's another 2 banks comes under systematically important banks under tier 2. Those are tier 1, tier 2. What are the other 2 banks? Now anybody can guess and tell me? Now
Commercial bank.
Commercial banks, yes. What is the other bank then? Okay, go along with the commercial bank. What is the other bank? Other leading commercial bank in Sri Lanka? No, not Sampad. What is that? We go with the commercial bank. Commercial bank is always fighting with this bank. What is the other bank? The number 1 bank in Sri Lanka. You have in around trillion deposit, trillion assets.
Ceylon.
What is that bank?
Bank of Ceylon.
Bank of Ceylon. So therefore, if the examiner asks you what are the identified systematically important bank in Sri Lanka according to the new way of classification, what are the banks? Bank of Ceylon, Commercial Bank, HNB, and HNB and People's Bank. All other banks are considered to be as of today, right? All are systematically unimportant banks, right? So what is the difference between systematically important banks with these banks? Only issue is they have a higher capital adequacy ratio, right? How it become higher? Because they have introduced so additional absorption percentage to the capital adequacy ratio, that is 1%, 2%, 2.5 and 3%. So we don't have a banks comes under the level 3. So we have only two levels. Level 1 is the People's Bank and the HNB. Level 2 is Bank of Ceylon and Commercial Bank. We don't have a 3-layer, right? So all these 4 banks are collectively, we call them as what? Systematically domestically important banks. All other banks in Sri Lanka comes under domestically non-important bank. That doesn't mean they are not important, but domestically non-important bank. So what is the difference between these two banks? Their capital adequacy ratio requirement is difference. Okay, whereas 12.5 for all other banks, right? And other banks have to maintain 14 and above. That's the difference. Capital adequacy ratio. Why high? That separate absorption reserve buffer need to be incorporated to capital adequacy ratio, right? Why? Because if something happened to those banks, it will significantly impact the Sri Lankan economy, finance sector. That is why we have categories. In that case, we can say those are the 4 banks basically have a lot of transactions and control the economy, right? And how these banks are separated, there's a 4 categories according to the central bank. There is a way of dividing. One is the size, the asset base, the transaction, infrastructure. Those are factors taken into account by the central bank. They segregated these. Okay, I think I have given you something extra, right? Okay, now I don't want to explain all these things. This is you have to learn under commercial law survey, right? Now, likewise, we have a systematically important payment system, right? Now, systematically important payment systems are payment systems that have the characteristic that failure of these systems could potentially endanger the operations of the whole economy. So therefore, you must have a system placed in Sri Lanka to do high value transaction, right? High value transaction. So what is the high value transaction? Is one method is called RTGS, right? RTGS. So therefore, if you say the large value payments are generally high value payments made by financial institutions, whereas the retail payments are executed individuals low value. Such large value payment systems are considered to be systematically important payment systems, right? So CBL has mitigated the risk by implementing the RTGS systems, thereby allowing financial institutions to settle their obligations on real-time security irrevocably through the RTGS systems. Now, what do you mean by the word irrevocably? Irrevocably, once you send it, you can take it back. You can reverse it, right? Like our all LCs are irrevocable LCs. Are you aware on that? Right? All LCs we import. Earlier we had revocable and irrevocable, but all LCs now are irrevocable LCs. Once you open, so you have to add. You can change it later on, but all LCs are irrevocable LCs. කියන්නේ දන්න බෑ කියන්නේ ඒක වෙනස් කරන්න ඕන ක්‍රමවේදයක් තියෙනවා වෙනස් කරන්න. Right? Okay. So then there are two real-time gross settlement system together with the government securities. Now treasury bills and treasury bonds settlement known as how you do that. Treasury bills and treasury bonds settlements taken care by Lanka Settle Systems in Sri Lanka. So these are the two institutions, two things where you have the bulk transfer facilities, right? Lanka Settle Systems and the other method is RTGS method. You deliver the payment systems. So what is systematically important payment systems? We have two. One is RTGS, other one is Lanka Net Security System, where you transfer a lot of fund transfers among treasury bills and treasury bonds between primary dealers, right? Okay, right. Okay, now this is a question. Now 2019, the question asked in SFS, which of the following is considered as part of the systematically important payment system in Sri Lanka? What's the answer here? What may be the answer if this question asked from Survey of Financial System? What may be
RTGS.
RTGS, right? So, okay, good. Right. Next one. Now we are moving to the retail payment systems. Now we say bulk payment was sent by the RTGS, where the maximum charge by the customer is how much? 400 rupees, not 1000 rupees, right? Remember that. It was changed recently, right? Maximum amount is 400. That is the question examiner can ask from you, right? Then retail value systems are basically, we call them as checks transactions, slips transactions, Sri Lankan interbank payment system, and SEFs transactions, right? So these are, we call them as the low value payment method, and also two mobile payment systems, right? Okay, you can make use of to send their low value payment. Okay, just get an idea about check image and truncation system. So that also not covered under my subject, but you need to have some idea about what is check image truncation systems. This system was introduced in 2006 by the Lanka Clear. So you don't want to send the physical check. Earlier you need to send the physical check to the receiving bank for payment bank, but now you can send only image. That is why you are transferring image to the bank. That is why call check imaging truncation system. Later on you need to send the physical check, but you immediately send only the image of the check. Based on the image, the payment bank will pay the amount. So you take time only for T1, that means only for 1 day. Certain within the Colombo, you do the settlement in the 1 day. But earlier, remember, it takes 3, 4, 5 days to do the transaction. If you issue a check to the customer, it be cleared maybe 3, 4 days. Depend on the distance, depend on the bank. Now, replace with the check return notification. That is the image we call CRA. So it will go to the respective bank and do the transactions immediately. That activity is facilitated by the Lanka Clear, right? Okay, that is systems in able to send the funds. So some idea about that. If you really look at it, average per day is transactions around 147 billion. It's a huge amount, right? Transactions are taking place, right? Next method is we are interested about the slips. Now slips mean interbank, Sri Lanka interbank payment systems. Now it is an online interbank electronic fund transfer system, mainly for low value payments up to maximum of how much? 5 million, and it is introduced in 1994. Now here, electronic fund transfer is a movement of fund from one account to another account without corresponding piece of paper to authorize or prove that transfer has occurred. Same day, remember, not immediately. That's the important thing. right? So the RTGS online, same time, same day, but slips not credit to the same day, but it may be happen maybe during the day, but not the immediately credited to the accounts. Now I want to send some money to another person through the slip system. It go same day, but not credited immediately to that account, right? So that's the one. So usually they charge 50 rupees for slip transaction. Are you agree with me now? What is the charge now? Now earlier we said 1,000 rupees for
30.
RTG. Huh? How much?
30 rupees. 30
30
rupees.
rupees. Yes, good. And that was recently changed. Therefore, please cut 50 and put 30 rupees, right? So that is why you need to. Well, last year we charged 50 rupees. Now is what? 30 rupees, right? Now it is 30 rupees. Okay, right. Now remember, in Sri Lanka, interbank payment systems operated by Lanka Pay systems, and settlements T is plus 0. That means the same day you make the settlement, but for check imaging transaction you take the 1 day, right? It go up to 5 million transaction imposed with effect for maximum limit of 9. There are around 45 participants involving in 6 shift system. Usually your salaries, your standing orders are sent through the SIP system, but it's not immediately credited to your respect accounts, right? It has to go through 1 day process. Okay, that you need to understand. Okay, so the amount of transactions to the slip systems may be by size. So you have average per day around 143, right? Per transaction, millions, right? Okay. So then we have another one which is called National Payment Council, right? In Sri Lanka, we have established National Payment Council uh, to expedite the payment systems in Sri Lanka, right? The CBSL established National Payment Council in 2006 to looking after for expedite the payment and settlement systems, right? Based on that, they were under 4 subheadings. We call common ATM switch, common electronic fund transfer switch, shared ATM switch, common POS switch, national card scheme, and common mobile switch. Right? Out of these 5 switches, what they introduced to do a speedy transactions, up to now, there may be around 4 areas was implemented. One is we call common ATM switch. Now, what do you mean by a common ATM switch? That is cards. So, common ATM switch means it is in your handout, right? So, Lanka Pay, the first phase of the CCAPS, it provides the facility of customers to pay of Lanka Pay to withdraw cash from any ATM machine. Now, earlier, remember before you using before central bank introduced this common ATM switch, right? So you can go only for where you have the where you have the Mastercard
Excuse
and
me,
the
sir.
yeah. Okay, go ahead.
These are not in our queue, sir.
No, there is some there. There are in the handouts. Is it common ATM switch? Is there in
No,
your other handout?
no,
No, not the same, but
no,
there
sir.
may be a no, is
No,
there?
no, no. You have shared this 2 handouts last week, right?
Yes. Right?
So in
No,
that
it
also, no, sir.
not there. Okay, I will send it, right? So I will incorporate it to a work, but it is there in your handout, the PowerPoint presentation. It is there. Just before the after the just pay common ATM
No, sir.
switch. No, it is there. See? Handout, which I sent earlier. Okay, anyhow, I will resend it to some of the things, right? Don't worry. Right?
Famous
Just okay. I
system
will.
and
Don't worry.
okay.
I will resend you some of the things we are missing. Right? Okay. Now, only thing is you don't want to know much of this, right? But I will explain by common ATM switch. Now, common ATM switch. Just listen to me. I will send you the note. Right? Just listen to me. Now, the common ATM switch mean earlier. So, if you have the card having the facility of Visa or Master only, you can do the transaction. The moment you using this Visa Master transaction, the some of the money for do the transaction is need to go to where for USA and then come back. There may be a fee is going out from the country when you do electronic transaction. But in order to prevent that, the central bank introduced common ATM switch. That means so whatever the bank card, ATM card you may have, so you can go to the any ATM machine, can withdraw the money, right? So that is what you call common ATM switch, right? Now that is introduced in 2000, as I explained in 2013, that facility is given. So that means suppose you are having a DFCC card or maybe Bank of Ceylon card, you can go to commercial bank ATM machine and you can withdraw the money. Earlier, we don't have a facility like that, right? Now you can go, but if you go for uh, commercial bank have the card, if you go for the commercial bank, your charges are less. If you go for other people machine, still you can withdraw the money, but charges are little high, right? You go maybe around 30 rupees per transaction, right? So, but still the money is lying with the country. It's not going out from the country for masters and visa owners, right? Okay, that is the common ATM switch. Lanka Pay, the first phase of CCPS, which was launched in 23rd July 2013, provides the facility to customers of Lanka Pay card members withdraw cash from their accounts and incur the account balances through ATM of other Lanka Pay members. So they show you the Lanka Pay logo. All these machine you can withdraw the money, whatever the cards belongs to you. For that you have to charge some 30 rupees per transaction. Now your own bank may be 5 rupees, 10 rupees like that. Okay, that is common ATM. So the brand name used for common ATM switch is Lanka Pay. Right. So the next method is we call SEFT method. So what is the difference between SLIPS and the SEFT? The SEFT is an electronic fund transfer, switch online fund transfer. Now, if I want to send to your account, so immediately credited to your account. Now, SLIPS you need to take 1 day, but in the SEFTs, immediately credited to your account. So if you want to send again the payment with a full amount is 5 million. So if you want to send the money immediately credited to your other receiver customer's account, so you have to use SEFT, right? That is what you call. You can use the method called SEFT system. It can be immediately transfer to the account. So that is what you call SEFT. So that was introduced in 2017 online method, right? So ATM was introducing, introducing SEFT systems was introducing in Sri Lanka is in somewhere in 2015, right? August. Okay. Now, right. So this is 30 rupees again, 50 rupees again. This is an all one. Now, what is the present rate? Again, you are sending through the mobile ATM 30 and other remain same, right? Now, SEFT also through the other methods, so you are going this 30, but 100 rupees will remain same, right? Only you are using your all machines, all accounts can only charge 30 rupees, but others are remain 100. There's nothing change, right? Remember that change, right? Nothing change. 30 rupees, but only the your banks are checking 30, others are still at 100 rupees. So this is in 2019 question, commercial banking question. What is the payment system introduced by Lanka Clear that support real-time electronic fund transfer of individual customers? What may be the correct answer? So this is your commercial banking paper. What is the correct answer? Here, that is SEFT system, right? Common electronic fund transfer switch. The answer is this, right? This is under commercial bank because real-time electronic fund transfer, low amount, right? That is why you call individual customers. Okay, right. Then in the questions came from financial crisis management in March 2018. Question number 8, they ask, you are the branch manager of a bank and one of your important customer has requested you via email to transfer rupees 1.5 million from his account to an account of a third party in another bank on the same day. Now, this is financial crisis management question, which was appeared in March 2018. Question number 8. Now, customer send an email to you and one of your good customer and requesting transfer rupees 1.5 million from his account to an account of a third party to another bank on the same day. Now the question is asking, briefly explain the methods to carry out this transaction on the same day by the bank. Same day by the bank. Now, okay, first I'm asking from you whether we are accepting email. Yes or no? Now, you're one of your leading customer, important customer, and requested through via email, right? Via email to transfer 1.5 million from your account to another account of a third party in another bank on the same day. Now, there are some keywords here. What are the keywords? Via email. Why? Second, what is the amount? 1.5 million. Third one, another customer, another bank. But that is not much important. What is important? On the same day. Now, 3 areas. Okay. Right? Now, you need to understand. First, I'll ask from you, can you accept your customer's request to via email? Yes or no?
Yes, if we have submitted the telephonic accident.
Yes, if
Yes,
we
sir,
have to
we can
accept.
accept.
Yeah,
accept.
if email, yes, we accept the email. Not telephone conversation, right? Telephone conversation also can do, but you have to confirm through email, right? Okay, so email is yes. So what is the amount? 1.5 million. So that means less than what? How much? 5 million. Then you are not using what method? What is the method you are not using? We are not using RTGS.
RTGS.
Why? Because it's less than 5 million. Now you need to understand what are the method you can transfer the money less than 5 million. Then there's a possibility of what? What are the 2 methods available with you to send the money? Either
SWIFT and
to
SWIFT.
Slips and
SWIFT.
SWIFT.
So why slips? Why slips? Now, suppose the examiner asks you like this, from his account to an account for a third party in another bank, immediately. So then, what is the option available to manager?
SWIFT transfer.
Only SWIFT, not slips, right? So that's to check whether your knowledge about same day. Now, same day means slips also possible. But if you say immediately credited to the account of the customer, then you cannot use slip methods, right? Now, so therefore, now got the points. Now, those are the special things you need to understand. So that means you are indirectly they are checking, you know, the amounts and procedures. So briefly explain the methods to carry out this transaction on the same day by the bank. You can use it, SEPT and slip systems. Clear? Right. Okay. Right. Then you have to explain on that, right? So you can send through the slips and SEPT. Okay, then 2019 March again questions um, about the financial crisis management. Write short notes on methods used to transfer of funds on the same day. The candidate could explain any of the following methodologies: RTGS, SEFTO, slips. Why not mention the amount, right? But only they explain the same day. So all these three methods can be used therefore. Earlier we have mentioned the exact amount, but here we not mentioned. Only thing is methods used for transfer of funds on the same day. So therefore you can make use of these three methods: RTGS methods, SEFs and slips. Okay. Now you know why we put RTGS here. Why we put RTGS? We are not mentioned the amount. Okay. The moment if you said 6 million, then you can't use B and C. Then you have to use RTGS. If you say 2 million, so you have to use SEFT and SIF. So you need to understand. Okay. Right. Okay. Now again question. Now I'll give a 2021 question also. Right. Maximum fee. Now suppose these questions come to your exam. What may be the correct answer? Now the maximum fee charge on a transaction, except for a transaction effected through LPOPP. That means bulk amount, right? Or maybe some other payment methods through insurance, through inland revenues and all, shall not exceed respect of funds transfer effected through internet banking, mobile banking, ATM of respective member SEFs. What is the amount? What is the answer?
30 rupees.
30 rupees. Very good. All other methods are what is how much is? Apart from these methods, LPOPP methods are all are charged 100 rupees. But with through not transaction through LPOPP are charged from the average customer is 30. But earlier we mentioned is 100 rupees, not 100%. Now it is bring down to 30 rupees. Okay, right. Then another questions appeared in the our exam paper.
Excuse me, sir.
Yeah. Okay. Go ahead.
So, what is the meaning of that LPPO?
LPPO mean exactly what is that? Is large volume platform of payment procedure, right? Those are the methods you can use the SEF to send to, like example for primary dealers, payments made to, you can send it to what you call custom clearings, and some of the money you will send it to separate identify locations like what you call inland revenue payments. Now banks need to send some money for inland revenue, no? So you can make use the SEF system, but for that they will charge you 100 rupees. Only for customers do through affected through fund transfers through internet banking, mobile bankings and ATMs, you can make use of 30 rupees. But other methods, that is apart from that, so LPOPP mean I can't remember the exact name, is being get to my mind quickly. Payment, those are payments method. These are sent through by for different destinations, different people, like as I told you, for Inland Revenue Department, customs clearing, and some other things. They are using send through the money through LPO PP. I will tell you exactly what is the LPO PP stand for next time. I just not coming to my mind immediately, right? So apart from that, all the customers transaction what you make through internet banking and these things will cover only 30 rupees, but other methods are charging 100 rupees, right? I don't have it at the moment. Okay, anyhow, uh, I will come back to you next time, right? Sorry, I can't remember exactly what is LPP stand for, right?
And sir, I'm really sorry. Those were in this this thing. What the tube, sir. I'm really sorry for the inconvenience at the previous time.
Yeah. No. I just put this. What you mean by this question?
No, sir. That ATM, this Lanka clear one, sir.
It is there, no?
Yeah, it was there, sir. I'm really sorry for that inconvenience.
No, Hamputa, no problem, no problem. So my duty for you to give maximum possible, every time when I go through again, Puta, I will see whether what I can incorporate, right? So then that is why sometimes now these tubes I will send you maybe one week or 1 hour, so 2 weeks before, no, right? So while I'm going through again, I have identified some of the things I need to incorporate it, right? That is why I incorporated to you, but anyhow you can look at it all this in the recorded version, right? Okay, doesn't matter. Okay, no problem, Puta. It's your duty to tell all these things, right? Sometimes I maybe miss, no, right? Okay. Now another questions appeared. Identify the most suitable financial services that could be provided to meet the following customers. Now, see, different questions asked by the examiner. It is also financial client management. Now, say they are giving 4 occasions. Now they are asking, what are the methods you can use to provide following services? One, a large corporate customer to pay salaries of the employees without issuing currencies. What is the method? Now you as bankers, you get the list of people, no? Right? And credited to so and so. Now say example, we'll say John Keys, for an example. Now John Keys may be sent to NTV, but say John Keys company. Now they have 100 or 200, 300 people. Now they are not paying earlier through cash. No, now they are sending to the accounts. Now what they do, what is the method they are using? Say like corporate customer of your bank want to send salaries to their employees. They have a different bank's accounts. What is the method your corporate customer can send the entire money with a list of people with the respect account number and the bank? What is the method your corporate customer can send the money to your account? Or maybe they won't send the money, they will say credit my account. So debit my account. What is the method?
Method?
Huh?
Slip method?
Slip method, very good. Usually for salaries sent by slip method. So then you have to answer it's a slip method. Okay, second, government to finance a road development project involving high level of funding requirement. Now, high government want to send some company, big amount, high level road development project, high cost. What is the method government can send the money to the road development project? What is the method of payment?
Syndicated bank loan.
RTGS.
No. We are referring to the sending money, right? Payment methods, right? Forget about
RTGS.
syndicated, right? These are
RTGS?
RTGS, right? That is why it's on government to finance road development project. Is high value, no? So that is what called through the RTGS method. Okay, a corporate customer who import goods items to the country.
LCs?
Okay, a corporate customer who
Auto
imports item to the country.
TT.
Yes, again you can say RTGS also and some SEFT also. An individual customer who wants to donate fixed monthly contribution to the student for his education? So you put a standing order. Every day every month you need to credit some money to one of the students' education purposes. What is the method you try to send? Say,
Slip method.
huh?
Slip method.
Best one. Best one. Now say so you are my student, right? I want to send some. I'm a individual customer of your bank. So you are a recipient of some money, monthly contribution for your education purposes. What is the best method I can send the money to you? Every month, it's basically going to account. What is the best method?
Standing order.
Yeah, standing mean how you send the money, standing order, correct. Standing order. That's good. That's a standing order. That's a method you want to do that, right? Okay. Clear. So what is the method? It's the standing order. Right? Every month, no. Clear? Understood? Standing order. Right? So that is why your monthly payment, your insurance premium, sometimes your loan settlement, you use the standing order. Every month, deduct from this and send to this. So it's a standing order. Right? So likewise, you need to understand what are the best method you can send the money based on the given requirement. Okay? Right. Right. Here. Answer to your question, right? That one gentleman asked, no, what is that method? See whether it is there. Right. So maximum fee effective through if not exceed to ATM, the maximum. So the maximum fee charge on a transfer effect to LPOPP shall not exceed 50 rupees. IRDs, this was effective from 1st January 2021 only. That was reduced to 30 rupees, right? See whether what is meant by not exceed 5 million transaction. Right. Okay, good. That is what you mean by LPOPP. So one student asked, no, Lanka Pay online payment platform. Okay. So LPOPP mean Lanka Pay online payment platform. That is the platforms available for facilities given by the Lanka Pay to send the money, right? So which facilitates online payments to government and other institution, right? Okay. So if you can send through the specific, there is a specific platform. So through the SEPs, you can send it to government institutions. So the maximum value fund transfer effective Lanka Customs through the sections code 58. So not to exceed 20 billion for transaction, you can make use of what method? LPOPP. Right? For that, they will charge 100 rupees. Now, the maximum value of fund transfer effected to Inland Revenue Department, IRD, through the transaction code 62, not exceed 10 billion transaction. Also, you have to send through a specific platform under CEFT used for that particular purposes. Okay, so right, one student asked from me, what do you mean by what you call that, the LPOPP, that is Lanka Pay online payment platform. Lanka Pay online payment platform. So which facilitates online payment to be transferred for government and other institutions, right? You have to use a separate code for that. So amount they have given, right? So that is a specific purposes. But other than that, you have to, from the individual customers, you have to use the SEPs, and we are charging only 30 rupees. Okay, clear? What is LPO?
Yes, sir. Thank you.
Right. Okay. So we will. Okay, we have some more to discuss about these payment methods. I will explain to you on next time. And then we go for next week. We may start at the new area, right? So the new area should be we are going to discuss the third area of our. Now we completed two type of clients, HR. So we need customer protections, where we are going to discuss what is customer charter, what is deposit insurance scheme, and things like that. What is ombudsman? All things we are going to discuss under next session. So very interesting also, and a lot of question asked at the exam. Okay, so we next week we complete this part, and I will send you a new note and about the customer protection, right? Okay, thank you. So have a nice weekend, or not weekend, no, finish no, new week, and be careful with the COVID. Huh? Okay, thank you very much. So we'll see you on next Sunday.